They say inflation is under control at 3%. They say Trump's tax cuts put more money in your pocket. But when I calculated the real cost of this economic strategy, I found something very different. And that's why many economists are quietly warning about what could happen in 2026. April 2nd, 2025 is a date that will be remembered in economics books for decades. My fellow Americans, this is Liberation Day. Within 48 hours, $5 trillion in stock market value vanished. The S&P 500 fell 10%. It was the worst two-day crash since COVID, and this time it wasn't caused by a virus. It was caused by policy. Now here we are in January 2026. The stock market has recovered. Unemployment is still around 4%. Gas is under $3 a gallon, and Trump is calling it the greatest economic success in American history. I've spent 10 years studying economic crises, from the 2015 commodity crash to the COVID supply chain collapse. And today I'm going to show you, using real data and real numbers, what this experiment is really doing to the economy. Because what we're seeing is not a long-term economic plan. It's a sugar rush, a burst of debt, tax cuts, deregulation, and pressure on the Federal Reserve that feels amazing right now, but could lead either to a true economic boom or to another Great Depression. Let me explain the idea behind this video. I call it the sugar coma economy. When you eat a lot of sugar, you feel great at first. Your energy spikes. You feel unstoppable. But if you don't balance it with real nutrition, you crash hard. That's exactly what's happening to the American economy. The sugar is tax cuts, deregulation, massive deficit spending, and easy money. The rush is record stock prices, low unemployment, cheap gas, and bigger tax refunds. The crash could be rising inflation, trade wars, and a national debt so large it would take generations to fix. Now, to be fair, Trump's economy is not all bad. There are real benefits happening right now, but every benefit comes with a bill, and that bill has only been delayed, not erased. Eventually, someone has to pay. Let's start with Trump's promise. Inflation would disappear. Here's the truth. When Trump took office in January 2025, inflation was already down to about 3% from its 9.1% peak in 2022. By the end of 2025, it hovered between 2.7% and 3%. That sounds good until you look ahead. According to the Peterson Institute, one of the world's most respected economic research groups, if Trump's full agenda is carried out, inflation could rise to between 6% and 9% by late 2026. That's nearly back to the painful levels of 2022. Why? First, tariffs. Tariffs are taxes, and Americans pay them. When Trump announced Liberation Day, he imposed a 10% tax on almost all imports. Some Chinese goods were hit with tariffs as high as 145%. The average U.S. tariff rate rose to the highest level since 1934. The Tax Foundation estimates this will cost the average American household about $1,200 in 2025 and up to $2,600 when fully implemented. That's not politics, that's math. Second, labor shortages. Trump's mass deportations removed hundreds of thousands of workers from industries like farming, construction, and food processing. When workers disappear, wages rise. When wages rise, costs rise. When costs rise, prices rise. That's basic economics. Third, pressure on the Federal Reserve. Trump has spent months attacking the Fed and demanding rate cuts, even while inflation remains above target. He has threatened to fire officials and replace them with loyalists. Markets know something politicians often forget. When a central bank loses independence, inflation gets out of control. Every major currency crisis in history started when leaders tried to bully their central banks into printing prosperity. Then came the One Big Beautiful Bill Act, signed on July 4, 2025. It made the 2017 tax cuts permanent. It removed federal taxes on tips and overtime. It removed taxes on most Social Security income. It created tax-free savings accounts for children. On the surface, it sounds wonderful, but here's the problem. None of it is paid for. The government cut about $160 billion in spending through Musk's Department of Government Efficiency, a one-time saving. But the tax cuts cost trillions every year. The Tax Foundation estimates the plan will add $3 trillion to the national debt over 10 years. Penn Wharton estimates $7 trillion. That's like adding the entire economies of Germany and France to America's credit card. And at this level, deficits eventually mean only two options: cut Social Security and Medicare, or raise taxes on future generations. Now let's talk strategy. There's a concept called the Madman theory. The idea is simple. If your enemies think you're crazy enough to do anything, they'll give in rather than risk disaster. Trump has applied this to economics. After tariffs were announced, companies rushed to invest in the U.S. Samsung, Hyundai, Toyota all announced tens of billions in American factories. In the short term, it worked. But there's a problem. The Madman strategy only works once. When your opponents see you blink, the power is gone. After Liberation Day, the market crashed. Trump paused tariffs, then restarted them, then negotiated temporary deals. Each reversal showed he would back down under pressure. And once your rivals know that, your leverage disappears. Now let's look at what really happened. Markets crashed, then recovered. But China retaliated with massive tariffs. U.S. farm exports collapsed. Supply chains were disrupted. The Peterson Institute estimates Trump's trade policies will reduce U.S. GDP by 5% by 2026, about $1.3 trillion in lost output, and tariff revenue has fallen far short of promises. The government expected up to $1 trillion. Reality, about $288 billion. Because when prices go up, people buy less. Unemployment is still low, around 4%. But job growth has slowed sharply. Federal jobs have been cut by hundreds of thousands. Wages are up, but that's partly because workers are scarce, which also drives inflation. Moody's predicts that by 2027, the economy will have 2.6 million fewer jobs than it otherwise would. Now add geopolitics. Ukraine aid has slowed. NATO trust is shaken. Europe is building its own military. The Middle East is unstable. China relations are tense. Markets hate uncertainty. Businesses stop investing when policy changes weakly. CEOs freeze spending. Factories get delayed. So what does this mean for you? The good news: gas is cheap. Tax refunds are higher. Mortgage rates have eased. Stock portfolios have recovered. The bad news: imported goods cost more. Food prices are unstable. Social programs have been cut. Healthcare costs are rising. And nobody knows what the rules will be next month. So is this real growth or just a sugar rush? Right now, the economy looks strong on the surface. But underneath, it's running on borrowed money and borrowed time. Debt is exploding. Trade relationships are breaking. Inflation pressure is building. By mid-2026, the dam may break. Retailers will run out of pre-tariff inventory. Companies will run out of margins. Prices will rise. The sugar rush is real. The crash might be too. This is the most dangerous economic experiment in modern American history. Whether it's genius or madness depends on whether the world blinks first. And history shows it rarely does. So don't panic, but don't ignore the warning signs. Diversify your investments. Stay informed. Read real data. Because the bill is coming. The only question is whether we pay it or leave it for our children.